Here.
Member Steve Cooley? Absent. Member Bill Bengesa?
Yes.
Vice Chair Richard Bennett?
Here.
Chair Baron Janetti?
Here?
Councilmember Carroll?
Here.
And Councilmember Martinez?
Here. Steve had mentioned that he would not get back from his daughter-in-law's, or his daughter's house tonight, and if possible, he was going to try. Mr. Beneke, could you lead us in the Pledge of Allegiance?
My pleasure. Ready, begin. I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
Any adjustments to the agenda? There's only one item on it. Good. Conflict of interest? Anybody have anything that's a conflict of interest regarding our issues tonight? Okay. Public comment period. Any one person may address the committee on any matter not on this agenda. If you wish to speak, please fill out a public comment form provided at the back table and give it to the committee chair or secretary. There is a 3-minute time limit on public comments. There will be no sharing or passing of time to another person. State law prohibits the committee from discussing or taking actions brought up by your comments. Do we have any comments?
Mr. Roy, did you want to speak now, or were you referring to the item?
I don't have a copy of the agenda.
Oh, okay, we can get you a copy, it's right up there.
Oh, there it is, okay. I will just do it public comments then, at the beginning.
Okay, all right, Mr. Unruh, you can,
Sure. Good afternoon, or good evening, or twilight, or whatever, dusk. Good dusk to everyone. I wanted to just, a couple of things. I want to focus on the park issue, if I could try and just drill down on that. You know, where I live in Fairway Canyon, we're still using very expensive market rate water to water the Nicholas Park. The reason there was no connection to the retreated water, which I understand is half the price of the retail water we're getting. So therefore, we have a lot of weeds and deferred maintenance on the fields. And so I was wondering, this is Finance Committee, so I was wondering if you could look at a way of tracking the dollars that are spent for the parks in terms of, I look at it as allocation of funds for parks. So in other words, is there a park account? And if you can connect that park account, let's say it's like $2 million. And then it says, okay, of that $2 million, this much is for future park acquisition, this much is for facilities maintenance, and this much is for ongoing maintenance and stuff. I think that the neighbors where I live would be really interested, because sooner or later, we want that budgeted. So the bottom line, we'd like that budgeted. And you're also going to add new turf. You know, I like Bermuda grass. I think it does well in the summer. But you know, you're going to have to actually put turf on. There's no natural turf on that, the southern part of that park. Nicholas Park, in my view, is probably the nicest park in the entire city. And it's a beautiful park. And it's not a park. We're very fortunate to get it. And so I hope you can continue that. But for me and my interest in parks, if we could just start getting specific identification for accounts tied into parks, and maybe you could highlight the parks and how the expenditures are spent. Maybe something outside of your income statement balance sheet, you know. It's not account number 74932, you know, but here's the parks budget, and you could break it down. So I really appreciate your consideration there, and all righty, thanks.
Thank you, Mr. Roy. Any other
no other
public
speakers.
comment? Okay, thank you. Action items. Beaumont fiscal year 2019 audited financial statement, draft form.
Okay.
Mr. Finance Director?
All right. Thank you. Appreciate it. A lot of time and effort went into this, and so I want to tell you that we're going to do a little PowerPoint presentation for you. And if it's okay with you, we'll try and get through that and then entertain questions. So if you have questions as we're going through, please jot those down, and I think we'll be maybe 20, 25 minutes, at the most 30, getting through this. And then we'll be happy to answer any questions and discuss the results of the audit. I have with us auditors from the Poon Group. And we've been working tirelessly for a while trying to get this together. It is in draft form. There's still going to be a handful of changes we're going to make between now and the final, which, depending on how the night goes and where we are, we're hoping to go to City Council next Tuesday, which will be the 18th, unless there's any kind of major stopping points. So we're going to tag team it. Vanessa Burke and I are going to be giving the presentation. I'll lead off and then turn it over to her for some period. I'll take it back over, and then she'll finish us off. So I'm going to go ahead and start off. Before I get going, let me go ahead and introduce Paul as well. So Paul was, how do you pronounce your last name? I'm sorry. Bangra. Paul is the manager on this project. He's the one that's been leading the field work and all that, and then Vanessa's the partner for the Poon Group. So they'll be walking you through their process and the part that makes it solely independent from what we do. So I'm going to kind of get into the PowerPoint. We'll take you into the introduction. Basically, what the auditors are required to do and what management work required to do. Vanessa's going to walk through that. But we're going to take you through what the process is all about, how the auditors go ahead and do their process and make sure that they're tying all the loose ends so that ultimately, when you get these financials, you feel comfortable that they materially represent the financial condition of the city. We're going to talk to you about the numbers themselves. We're going to talk to you a little bit about financial indicators and key pension information, and then we're going to answer any questions you have. So the annual required communications, I'll ask Vanessa to speak to that real quickly.
I'm excited to be the only agenda item. That means I have all the attention tonight on the audit, so this is great. Last year, we were here for the Audit and Finance Committee around April 1st, April Fool's Day, and so we're really pleased to be here several months earlier in draft this time. Last year, we did it in final form, but we thought this would be good with Jeff coming on board to have an opportunity to have a draft financial statement, have a discussion of it, take an input, give an opportunity for dialogue, and then encounter those and take those into account over the next couple days. I don't anticipate anything would change substantially from the document that you received and have in front of you. I am going to go through our annual required communications, which is part of our professional standards that govern us under the American Institute of Certified Public Accountants. We're required to communicate to those charged with governance at least on an annual basis, if not more often, in various ways to communicate. And one of those is to meet with you in person, have two-way communication, enable that discussion with the audit process. So with that, I'm going to go through, and do I have a clicker here? Somebody drives it
No, I'm doing
from
it
here.
for
Oh,
you.
you're
We're
gonna
on
do it.
page 4. We probably should keep it on the PowerPoint because there we go. We're going
There
to be
you go.
referring to this. This is page 4.
Yeah, so I know you've got a really thick document, and what we did is we condensed that down. You can spend as much time as you want on that one, but we condensed it down so that everybody can get home at a reasonable hour. But under our responsibilities, we are required to perform an audit under what we call GAS and GAGAS, which is Generally Accepted Auditing Standards. And because you're a governmental agency, I would call it GAGAS, which is Generally Accepted Government Auditing Standards. And that's referred to more commonly, if everybody has heard, as the Yellow Book. And so you're lucky as a government agency, there are additional compliance requirements under those standards that we have to incorporate in our audit because you are a governmental agency as a municipality. Our audit annual required communication includes discussing with you kind of our scope of our audit. That doesn't mean we tell you exactly what we do, but we do tell you in broad terms what the scope is, what our timing is of the audit, and then any other information that we feel is relevant for you in order to execute your responsibilities. We talk about significant accounting policies. We need to bring those to your attention. Estimates in the financial statements and disclosures, and I'll get to that in the next page. And then in addition, the next 3 bullets, we're required to communicate with you as the audit committee if we've encountered any difficulties during the audit, any disagreements with management on the application of GAAP, what we would call generally accepted accounting principles. And in the case of government agencies, those are promulgated by GASB, which is the Governmental Accounting Standards Board. We call them the GASB gods. They're the ones that set all the standards of everything that goes into your annual financial statements. Then we're also supposed to communicate, and are communicating today with you, any consultations with outside accountants. And what that means is, did management, in selecting us to be your auditors this year for the city of Beaumont, consult with other auditors and say, hey, we have a situation, and would you engage us this year and form an opinion and sign off on this to ensure that these financial statements are right? Because I'm contemplating hiring a firm, and if you can say you're right, we'll hire you. I'm pleased to say we didn't, to my knowledge, they have not consulted with any other outside accountants, and we've had a very collaborative working relationship on issues during the audit that we may have encountered. We're also required to communicate reportable conditions and internal controls. We do evaluate internal controls as part of our audit in order to perform our audit planning process, to do our risk assessment process, to help us design our audit procedures for the year-end audit. And we communicate any reportable conditions. Those are deemed to be significant deficiencies or material weaknesses in the design or operating effectiveness, operations of that control. Last, we communicate any audit adjustments that are unposted at the end of the audit that could be what we would deem to be speculative. Management hasn't posted it. We've recommended it. They're saying it's not significant. We would communicate those to you if we had those. Next slide, please. So our responsibility under generally accepted auditing standards and government auditing standards is to express an opinion about whether the financial statements prepared by management with your oversight and governance are fairly presented in all material respects in conformity with U.S. generally accepted accounting principles. That audit itself doesn't relieve you or management of the responsibility to ensure that those financial statements are accurate. And again, it does give reasonable assurance, but not absolute. We also consider the internal controls over financial reporting and compliance to determine audit procedures, as I just discussed, and for the purpose of expressing our opinion on the financials, but we don't give you assurance whether or not the internal controls over financial reporting are operating effectively. Effectiveness requires a whole, that's SEC company. They're required to issue an opinion on effectiveness under generally accepted government auditing standards. That is not required. As part of obtaining reasonable assurance over the financial statements are free of material misstatements, we also perform tests of compliance with provisions of laws, regs, contracts, and grants. So we encounter that throughout our audit in various capacities, and we risk assess you for those areas in which we're going to design our procedures to look at compliance. Providing an opinion on your compliance is not an objective of our audit, and our opinion states that. Talk about plan, scope, timing of the audit and other areas. We do audit all the major funds and aggregate non-major funds of the city. Major funds is a determination, it's a calculation that is provided under the standards as to what we deem to be major. Management can also make an elective decision to put something in as major, and if it is, it's disclosed accordingly in the financials that they made the decision to present it as major. In addition, any component units of the city are also incorporated into the audit if they meet certain tests and provisions. One of your component units, which you'll see is included in here, is a Beaumont Financing Authority. Its existence and its responsibilities between it and the city are so closely tied that it would be misleading to leave the component unit out, so that information is included in your financials. We issue a report on the fair presentation of the financials. We are issuing a general purpose financial statement for the city of Beaumont this year. You'll often hear comprehensive annual financial reports, and I know that's one of Todd's visions, is to get us to a CAFR at some point. This is not a CAFR, it's really considered a general purpose financial statement for the city. So it's less, and it doesn't get filed for the Financial Reporting Award for Excellence with GFOA. Our scope also includes preparing a single audit if you receive federal awards and expend greater than $750,000 or more a year. Clearly, you are doing that with your Federal Highway Transit program, and so we did audit that this year and last year under the single audit. We don't have that for you today. It's in process of being reviewed. Those audits are due by the end of March to be filed with the Federal Clearinghouse, and so we'll present that. We're hoping we might have it done for the council meeting, and if we do, we would bring that to the full council. We also issue a report and agreed upon procedures report on the GAN limit. And that's really where you receive the GAN limit as part of your budget setting process in order to determine limits on appropriation. We apply certain agreed upon procedures and render a letter of compliance annually. That report is in draft and in review by management. We will issue that with the complete final package for council. We did not have any findings in the GAN limit. Last is just including obtaining an understanding of the entity and your environment and internal controls. We do that in a way in which it's sufficient for us to assess risk of material errors and misstatements in the financial statements. And those are errors due to not only just calculation or accounting errors, but also due to fraud. And misappropriation of assets or any violation of laws or governing regulations. And last, we would communicate any reportable conditions at the conclusion of the audit under our standards. We also, next slide please, we may issue a separate management letter for improvements. That's an optional thing. Many auditors will do that. They consider these to be quote-unquote other matters. They're just operational. You might want to check this box. You might want to put in a form here. But generally, those aren't deemed to be areas that rise to the level of a key internal control for purposes of controls over financial reporting. And we have those conversations and communicate those to management. Those can be done orally. They don't have to be done in writing under professional standards. Sometimes it's optional to have that done. We do, as part of our audit, meet with city management and with you, those charged with governance. We review city policies and procedures together, establish any specific requirements. We've done fraud interviews throughout the organization. Some of you may have received fraud questionnaires, not this year maybe, or last year. We often rotate those and don't necessarily do a fraud questionnaire every year. Sometimes we do those in person. And so we vary our process for fraud throughout the organization so that there's an element of surprise. And once we do all that, we really develop our audit work plan for the engagement. Provide periodic update meetings with management to communicate our audit progress. I think we did quite a few of those this year. And then in the other areas of non-audit services, we communicate those with you as those charged with governance so that you know what other services we're taking on outside of the audit. And that's necessary for us to do that so that you can evaluate and ensure we have to evaluate and ensure that we have independence in relation to the financial statements. We do assist in preparing the financial statements for the audit, including the disclosures. We go through those with the client. The client reviews those and has time. Management, Jeff, his team all went through them, asked lots of questions, changes were made. So that's an iterative process, but really ultimately Jeff and Lisa take responsibility for those. Pension accounting entries, we help with those. They're complex. We do have templates we use. You're in a cost-sharing plan, and a lot of that's readily available from CalPERS anyway. But we do assist with that. If we were to talk about a regular audit timetable and status, and I think we're getting near regular here at the City of Beaumont, often audits have taken a lot longer. But a normal time frame is between 6 to 7 months after the end of the fiscal year. You should be expecting to see an audit of your financial statements. Usually, we take our interim process, we do our planning and interim, the first 2 steps where we're meeting with you, we're looking at new GASB standards which we might have to implement, developing audit work plans, testing your controls. All that is really done right around year end, which is in the June, kind of May, June, July timeframe. And then we go away and we give management time to close the books after June and get bank statements and investment statements, and they send out confirmations independently. They give them to us and we mail them to all your banks and your trustees in order to validate and perform independent testing over your year-end balances. We generally come back in the fall timeframe, depending upon how ready they can be after they close the books. We finished here, I think, around November. We go away, and then really in this kind of December, January timeframe, we work on putting together the really thick book and all the other reports. Has to go through 3 levels of review in our firm: manager review, partner review. There's 2 partners assigned every engagement, myself and Ken Poon. I'm the engagement partner, he's a concurring partner. And then we have a 3rd engagement quality control review partner that reviews every report that goes out of our firm. And then at the closeout at the end is we present to you as the governing body. Next slide. Continuing annual required communications, really the items that I really want to point out here are on this slide is any significant accounting policies or estimates would be disclosed to you in footnote 1. The two that I often call out and most is when we say significant accounting policy or estimate, estimates are significant because they can change. They can change based on underlying assumptions, and so they absolutely have a higher level of risk of material misstatement in them because they're more subjective and less objective. And so we always risk rank those high in terms of significant accounting policies in those areas where you have substantial balances and investments that are at fair value would be your investment accounts, your valuation of capital assets, including infrastructure and related depreciation, and your net pension liabilities. Those happen to be the three largest numbers on your balance sheet, and so that's really where you would think we would focus a lot of our audit work. The footnotes, if you were to read any in the financial statements, I've labeled them here. They're really the same, but your long-term obligations, note 6, note 7, your pension plan, those are all critical because those are the long-term liabilities of the city of Beaumont and go out and project for many, many years. So they're really important to take a look at those to see how many years out that debt stream is. Note 4 is if we posted any prior period corrections. Corrections of prior years means we came upon something this year, we looked at it, we interpreted it differently than last year. We applied the standards and we've corrected the opening balance. And we did have one adjustment related to the development impact fee being moved over into the correct fund. And then note 15 is any subsequent events that have occurred since we left field work and that are kind of in progress. And you did have some of those which were related to refundings and refinancings, and we've disclosed those. Significant audit adjustments. This is where if we had an audit adjustment that we came up with during the audit, recommended it to management decided they didn't think it was material under their terms of materiality and didn't post it, we'd have to bring that to your attention. We did not have any of those in this year's audit. That's significant. Annual required communications, I'll continue this. This is really, we need to communicate to you any new or any status of prior year findings as part of our single audit, which is the audit that we perform under the federal grants. That'll be coming to you, but what I did is I summarized essentially all of the prior year audit findings for purposes of this meeting. I will tell you, we did not find any new significant, any new material weaknesses in this audit. And we're in the process of evaluating the others that we have. If any elevate to a significant deficiency, we would bring that to your attention. So last year we had 5 material weaknesses, policies and procedures, establishing a comprehensive fraud program and policy, segregation of duties over cash receipts at City Hall, segregation of duties for building permits, segregation of duties for the business licensing program. So those were deemed to be those were material weaknesses, meaning the controls were not sufficient to prevent and detect an error from occurring in a timely manner that could be significant to your financials. In these, corrective action has been taken in all except for one, which is your business license program. And that has to do with the system integration, and Jeff could talk about that. Maybe I'll pause at the end of the slide and you could talk about that. The other is the comprehensive fraud program and policy was implemented during the period of the audit, so it wasn't operating during a full period of this year audit, but management has taken corrective action on all of those. There were 2 significant deficiencies. This means there's a weakness in the internal control structure or system. It doesn't rise to the level of material weakness, but we think that it's important enough to merit your attention. There were 2 findings in this area, transit occupancy tax reconciliation process. That had been, corrective action's been taken on that, and I think it was a partial year last year. It's a full year this year. And then the overhead cost allocation plan, that is in progress, and I know Jeff is evaluating that.
So, I'm sorry.
Go ahead, you want to go on?
I can just
Yeah, that's good.
identify the 2 that are in progress with regard to business license. What I've discovered is that we have an HDL system, which is where we actually bring those revenues in. And then the monies get basically converted over in a conversion entry into the Encode system. So that's where we record your financials. What we're not doing, we haven't been doing, and we're going to start fairly immediately because it's not that hard of a process, is getting a summary report out of the HDL system and comparing those dollars independent of the person collecting the money, independently verifying that those amounts tie together. It's a fairly straightforward process, but one, quite frankly, we just haven't been doing. But it's something I'm going to implement fairly immediately. I think that will take care of this finding. So, on the second piece, with regard to overhead cost allocation, we have done some cost allocation processes, but quite honestly, it's not going to the extent of the recommendation and of the findings from the auditor. We have not yet allocated costs out to federal and state grants in some of those areas where we could be. I talked to Vanessa, and we're of the same mind that it probably makes sense to go. You should do this every few years either way, but we really need to get out and actually have a cost allocation study completed to make sure that we are not only doing it for this purposes, but for fee structures and things like that. There's a variety of purposes why you would do cost allocation, only a couple of which are in these findings here. So I think I'm going to recommend, at some point in time, we'll be coming to City Council and recommending that we move forward with a more robust cost allocation process.
And the last kind of area where findings can occur is in the highway planning and construction cluster. And this year you spent about $9.9 million in that for Potrero. I think last year it was around $7.5 million, I think was the amount I had in the PowerPoint presentation. So a very large sum of dollars. And we audit that specifically. We audit that grant and pick expenditures underneath it. And then the drawdowns and the requests from the federal government. There are a variety of compliance requirements we have to go through under the compliance supplement. This year we did that. We did not have any findings or question costs in that area. It'll come out in a more formal report to you as part of the single audit. And then I think I've got the last two slides. I really went over management's responsibilities, so I'm going to kind of skip that slide. I do like that you have implemented the policy over fraud because it is really imperative that you understand that management is responsible for protecting, preventing, and detecting fraud throughout the organization. A lot think the auditors should find it, but really it's imperative that everybody throughout the organization be involved in that process. Next, page 13, audit results. As of today, we have issued, and you've got included in your packet an unmodified opinion. It's the best audit you can receive. There's nothing higher than that. You can go down, but not up. And so, a lot of people refer to it as a clean opinion, but really it just means everything we just talked about. Financial statements are fairly stated in accordance with generally accepted accounting principles under the GASB statements, and we did not have material misstatements that we found. Significant accounting policies are applied consistently year over year, and if they weren't, we'd describe those to you. Estimates that we looked at are deemed to be reasonable, and disclosures are proper in the financial statement. There's nothing in there that is missing. The single audit is in progress in partner review. There were no new material weaknesses, as I indicated. We're reviewing the any significant deficiencies or other matters with management, and just concluding on our final place for those. Major program compliance, no findings, and corrective actions taken on all but 2 findings. So I think it's really a great report from the audit perspective. And I guess with that, Jeff, I'll turn it over to you for
Okay,
financials.
so yeah, I'll walk you through, and I've got a team to help me if I stumble. I'm still 4 months on the job, so be patient with me. So I'm going to walk you through the sections of the report, if you will. I don't know if you've had a chance to look at it. If you haven't, it's a great read. It's sure to keep you awake at night. But really what we have is it starts off with the independent auditors, their opinion. You'll have that, and as Vanessa mentioned, the good news is we have a good unqualified opinion. The MD&A, which is a collaborative thing, we take the numbers from the financials, but there's a lot of narrative and stuff from management discussing what the numbers mean. And so I think the MD&A is good to go to if you want a snapshot of what the financials do. It does roll it out in government-wide. If you look at that, you have the government-wide financial statements which the expert here can tell you more, but really are done on a full accrual basis. It rolls up your amortizations and your accruals are rolled into that, whereas our fund accounting is more of a cash basis. Okay, so it's depreciation and amortizations aren't included in your expenditures in that type of situation, whereas they are in government-wide. The notes to the financials are, actually, if I was going to spend time and I really wanted to understand what the numbers mean, I would read the MD&A and I'd read the notes, because the notes do describe how the financials are prepared. The kinds of terminology that she's talking about, note 1 in particular talks about basically how everything was looked at. But then you go through it and you'll see the beef of what's in the financials. It's a lot easier, in my opinion, sometimes to read the notes than it is the actual financials themselves. And then there's supplementary information, which is more aggregate information that gives you some comparative analysis. But it allows you to see, if you want to see on a historical basis, the tail end of the audited financials will provide that for you. So digging into a little bit of the numbers for you. It's like it's bouncing. Is it bouncing there for everybody else? This is awesome.
You got it?
It's like it's
You
almost
want me to
dancing.
drive?
So this is kind of summarizes our assets and a statement of net position when you consider the liabilities. And so the assets have gone up a little over $27 million. That's a good thing. And that is, that's largely because of some of the, the capital assets that we brought on. Some of the elements of that are including in your cash and stuff. You've got liabilities that have increased, and that is primarily, if you look at your liabilities, probably because our unearned revenues have gone up from about 22 to about 35 million. And so that's unearned revenues, primarily DIF in development impact fees, where we've received the money, but it's not yet been allocated towards a project yet, or hadn't been spent on projects. Then if you see below at the bottom line there, you've got 19.5 million increase in your net position. I would call out the unrestricted because it makes sense. If you look at that, we've gone from a negative to a positive, and that's also a good thing. So we're making strides on the financials. Going forward, looking at your revenues and expenditures, again on a government-wide basis, your charges for services are a little bit down from where they were. I wanted to point out to the committee that we did find an error in the computation here. 5 million of that operating grants actually belongs to the capital grants. That is your Potrero project. And so we have contributions and grants that actually should be down below, and so that explains a lot of that variance there. So it's a correction we'll be making as we go forward to fix the financials.
Before it becomes final.
Yes,
Yeah.
that's correct. But I just wanted to it won't change your aggregate numbers, it just changes the classification. Instead of being operating, it should be capital, because it's a capital project. Wanted to point out that you can see the special item that was related to your refunding back in 18, and so that's that item. As far as your expenditures going down, that's largely due to interest expense, and then in your public safety, it's the proportionate share of the pool. Our public safety isn't a pension pool, and when CalPERS does the assumptions of how much of the expense belongs to us, the liability, they make some adjustments, and that reflects both that and the reduction in your interest. Looking at business type activities, so your biggest change here really on both the assets and the liabilities is your sewer plant and the bonds that were issued for it, the sewer plant and the brine line. So you can see that on both the top side on the assets, significant increase, and also a corresponding increase in your liabilities. Down below, you can see you have now an unrestricted deficit in your net position. That is due to a couple of primary reasons. We had some DIF funds that were sitting out, so this is one of the adjustments that Vanessa referred to, where we moved development impact fee out into the project accounting, but it wasn't spent yet. And what we should be doing and what we will be doing going forward is as those expenditures occur is when we're moving the funds from the restricted account, in this case, the Development Impact Fee Fund, to the capital project. And so that's one of the reasons you had so much money sitting as unrestricted in 18 is because part of that was that development impact fees that were sitting in that fund and really belonged to the DIF fund. The other piece is that we have an ongoing project, and so we have some accounts payable and things of that nature related to the project that we haven't yet pulled the money over for. And that's the other piece of that change in your unrestricted net position. So going forward, looking at the revenues, I don't have too much I want to talk to you about here, except for that you'll also see in the capital grants and contributions where it goes down from about 6.1 million to 1.57 million. That is primarily that DIF where you'll see that we have less money coming in from DIF, or the money is going back to where it belongs. You also will see that we have a difference in revenues, and that's also related to investment earnings. So we have the money, the bonds that we've issued, but when you don't spend it, you earn interest on it. And that's what part of that change is there. So now I'm looking at the general fund, and this is the balance sheet, and your assets have increased from about 13.4 to almost 20 million. And so you've got some nice input. As you see later on, your unrestricted fund balance is also going up. So there's a lot of good things happening for the general fund. Right down below, if you look at, you see that 14,980. That is that unassigned balance. I remember coming to council a little while back saying I thought we'd be close to 15 million. I'm happy to say that we're really close to 15 million. And you can see that's an increase from about 10.3 million from last year. So it's an upward trajectory for the general fund at this point in time. This talks a little bit about your inputs and outputs, or your revenues and expenditures for the general fund on a comparative basis. And you can see your revenues versus your expenditures. And you can see what where the numbers have gone. And so we've got some positive numbers going on. Now, when you look at this, one of the things you'll see is the revenues over expenditures is a negative 270. But this is because your CFD transfers, which are there to support operations. This is the funds that sit in the special CFD fund. This is those operational transfers from the CFD. Those are included in transfers. And so when you see below the other financing sources and uses on there, about $5 million in 19, which was about 4.4 in 18. What's reflected in there, the two big pieces in there are gas tax that comes over to support your streets and management programs, street and maintenance programs, and your CFD transfers that come in. So when you bring those in together, your change in the fund balance is about 4.7 million to the good. So we got a couple of things to give you now. These are just some comparative numbers that tell you a little bit about where your revenues are compared to your cost of services, in this case tax revenues. And you can see in 18, it was about 21.3 million compared to 40.7 million, whereas now it's 23.5 compared to about 38.4. So actually your taxes have increased as a proportion of your overall cost of services. The next one, which I think will make the council and committee happy, is that your ratio of your unspent or unassigned fund balance, which is essentially your reserves, have gone up from a 33% level of your expenditures to about 42% of expenditures. And as we've talked about at the council meetings, their target is pretty much around 25%. So there's a little bit above and beyond your normal target. And with that, I'm going to turn it back over to Vanessa to take us to the finish line.
Yeah, So, I think what's great is to see the improvement in the unassigned fund balance, and a lot of agencies are starting to sock away money there, understanding that the pension costs are going to be growing. Not sure CalPERS is going to change rates, et cetera. Assumptions, so far, it's stayed stable for the last couple years. So the next two slides is really just to kind of bring to light what a change 1% change in the discount rate could have as its impact on your city and your financial statements. The top line is the 7.15% discount rate, which is the CalPERS rate plus an admin fee. And you can see you've stayed relatively stable between the 2 years, and maybe next year I'll put more years in here, because I think we've got a few more years that might show you how these things are trending. But I know Jeff's looking at this as well as Todd. But you can see that your net pension liability for the miscellaneous plan, this is just miscellaneous, not public safety, went from 6.8 million down slightly to about 6.7 million. As you all know, CalPERS had a banner year. It takes a while for those years to hit the actuarial report, because this is as of a 18 actuarial valuation date, measurement date, and then roll forward to a 19 reporting date. So its banner year this year won't roll in for another few years, but we know there's been improved performance overall at CalPERS over the last few years. So that's why you see the net pension liability going down slightly. If, for example, they were going to decrease the discount rate, you can see you can move from today's 6.7 million to 10.9 million very quickly with a rapid rate change like that. They usually taper them in, so you don't experience it like that, because they understand public agencies have a hard time with it. And then if you moved up to 8.15, and that should be 8.15, not 8.65, that was the old rate, you would move from 10.8 or 6.7 million down to about 3.3 million, and wouldn't that be great if they did that? I don't sense that happening. You can look at the funded status of the plan. Even with all of that activity, has only moved from about 76.06 to 77.28%. And you all are aware you're in a cost-sharing plan, right? So you're sharing all the good and all the bad with everybody else in that plan. So,
Who's everybody else?
everybody else, it's all the contract cities that have joined into, and special districts, and there's a long list of maybe 10 pages of agencies in that plan and in that pool. Their information is all readily available to you, so you can see kind of who the good guys and bad guys are in the plan. But anyway, you are part of that plan, that overall cost sharing plan, and it would be good information to look at to see how large you are compared to the other agencies in there. Some of the larger ones are, they would risk rate those pools and probably bear some of the brunt. The next public safety cost sharing plan, you're also cost sharing there. We booked your net pension liability, or management did. You can see again at 7.15% discount rate, it moved from 10.2 million to 10.1 million. I mean, the needle's barely moving. That's the difficult part, and why the unassigned reserves is really important in your general fund. If it dropped 1%, 1 basis point, you'd move from 10.1 million to 15.7 million. If it moved up 1 basis point, you'd go from 10.1 million to 5.5 million. Overall funded status of the plan has moved from 73.93% to 75.38%, slightly better. But again, very, very small movements, even, the market hasn't yet. You haven't seen the hit of the market in these actuarial valuations yet. You will in the next couple years. And so with that concludes, I think, our joint prepared remarks. I do want to thank Paul. I thought the reason you were pulling him up was to introduce and say, yeah, he was putting hours in at the wee hours in the morning, because we were all getting emails at 4 a.m. So I'm really glad to have him on my team this year. It's really, actually, it's a great year to present, because we did have turnover on management side, and we had some turnover on our team. So it's a really, even though it's our third year of the contract, a fresh set of eyes looking at the same numbers that we have had over the last few years. So it's been great to see kind of that change in the addition and that fresh look. So with that, I'll turn it over to council. Audit committee.
Do we have any public comment?
No, sir.
Okay. I open it up for questions. Yes, Frank?
I happen to be an accountant with me. I probably a little picky on some of these things. Jeff's presentation on the financials themselves was pretty much a very macro level presentation. I'd like to look at the statement of net position in a more detailed level, which I find on pages 18, 19 of the hard copy that's here. I found it on 24 and 25 on the one that was sent to us by email or something like that. I'm not sure of the number. But at any rate, for our purposes, for the edification of our members here, I'd like to highlight the current assets and current liabilities. Like I say, they were presented very macro, but on this statement, you get a little more detail. And what I see is, first of all, cash, $73 million of cash in the general fund as of June 30th. And then on the current and overall current assets of 85 million. So the bulk of our assets extremely liquid. Okay? On the liability side, the current liabilities, I see roughly 6 million or something like that of actual hard liabilities that we have to write checks for. And then a bunch of other liabilities, primarily the unearned revenue, which I don't believe we're gonna be writing any checks for. Is that right? Am I wrong?
So the unearned revenue, what you see there in government, so remember, this is full accrual, government-wide financial statements. So under AB 1600, when you collect development impact fees in cash, you are required to hold that cash and spend it on projects over 5
I understand
years.
that. What I'm asking is, we're not gonna have to write any checks to pay these liabilities. These liabilities
No.
are just, we're gonna amortize them.
You're gonna earn that revenue.
earn that
You're gonna earn
revenue.
it when you spend it, but you're gonna spend the revenue that you collected when the project gets constructed.
So we don't, so it's part of a project.
Kind of releases at the same
Yeah,
time.
it does offset your cash, though. That cash is being held on the asset side, and this liability is there until we actually spend that money on a project. And then the cash will go down and that liability will go down at the same time.
Kind of a wash.
Okay. All right, so then we are gonna be writing checks.
You would net, you could net them, but GAAP doesn't allow netting on the face of the financial statements for
Okay, but
that.
in any case, our position is very strong.
Yes.
Because it's 85 million to 48 million,
Correct.
all said and done, which, for the edification of our group here, that's to know. You talked about an effectiveness opinion, which is required under SEC rules, not required here. If we, as a committee, wanted an effectiveness opinion, we would like to know how much it affects our cost. And if we had one, would it benefit us to have it in terms of evaluating the frauds, potential for fraud?
You could spend the money to get an effectiveness opinion. You could spend the money also to engage internal auditors, to do more operational review type things. There's a lot of ways you could spend those dollars. So you have to think about, are your fraud controls and procedures sufficient to prevent fraud from occurring in the future? Obviously, there was a history here and you're moving forward from that. They're never foolproof, right? Even Enron had internal auditors and policies and procedures, and they still had a fraud. And so it really starts kind of at the tone of the top and works its way down. Could that effectiveness opinion give you more credibility that you have really solid, strong controls? And remember, those are related to internal controls over financial reporting. It could. Is it going to change your bond rating? Probably not. I don't think your bond advisors are going to say, we really want to see an effectiveness opinion on your internal controls because we're going to use it to rate your bonds. you could answer that question, but I doubt that is going to happen. Most governments do not do effectiveness opinions. They typically move to the internal audit approach, or they do an overall risk assessment, and then they do an internal control review. But they don't test for effectiveness necessarily. They do more studies.
Frank, I think that's an item that we can talk about after this that we may want to do. But right now, we need to
Yeah.
look at this report in its content, because that's not going to get done when this is submitted. But I think we, as a committee, we can recommend that in next year's, if necessary.
You could.
I think though, I do value you bringing it up and getting our auditors' feedback on that. So I do think that it's valuable to get the perspective on. And I do think that it's worth discussing at any point in time in the future, the internal auditor approach versus the effectiveness approach. So I appreciate you bringing that up.
Mr. Beneke?
I'm just curious, general audit versus capper, I guess?
CAFR,
CAFR.
Comprehensive Annual Financial
Yeah.
Report, uh-huh.
That's something Todd's shooting for.
It's something I'm shooting for.
Okay, that's something you're,
The Port Pond group has been hearing that while they've been working really hard at getting us these audits for the last couple of years now, so they know that that's the objective. Go ahead.
what would be entailed in getting us to that point? I mean, how much different? I mean, is it, I guess I'm not real familiar with how you get there versus what we're doing now.
Yeah, so there's another, it's not a standard setting body, but it's, what would you call it, an advisory committee or organization of government finance officers. And I'm actually a certified public finance officer. I took the test under the GFOA, which is a Government Finance Officers Association, and passed it and applied their rigors, which basically says you can do, it says we've tested you and you can do governmental auditing. There's like 700 of us in the country. The award programs that they offer are in two areas. There's budget awards for excellence and the award for financial reporting, excellence in financial reporting, and that is the Comprehensive Annual Financial Report. I think most organizations, you guys have been through a history, most organizations do apply for and do want that award. It's a way in which the finance department can celebrate their efforts and hard work. And what goes into how much goes into an audit and having clean financial statements, and that it meets those certain tests that the GFOA as a body has established is best practice. So I would always recommend, if you can get to that point, the two pieces that are not in here are the transmittal letter from the city manager, where he gets to essentially kind of put together an annual report or kind of broadcast the positive news, and if it's dealing with negative news about the city. And then in the back is the statistical section, which is really important because it often provides 10 years' worth of trend information. We dealt with many years here, and this is our third year on the contract. We were just trying to get cleanup. And so you have to contemplate whether that 10-year trend information is going to give you good information or not, and where do you start? And would GFOA give you an award if you only had 3 years of trend?
So it's an application, a process.
It's an application.
Okay.
Yeah, and you submit it.
And from my understanding, time is a big factor that isn't in our favor.
I can
right now,
understand.
As we stand now, we're sort of building the house.
Yeah.
as we go
The
along.
requirement is a 10-year,
Most of the tables are 10-year trend, and I haven't called GFOA to see if you can do less trend information, given kind of the situation that happened here at the city of
that would
Beaumont.
show a 5-year and then a 5-year?
Yeah, they
Maybe get the
can.
award for doing that.
Yeah.
Okay, I didn't know what it entailed, now I do know what it entails, so. Time is pretty much what you're talking about.
Yeah.
Mr. McGinty, do you have any questions?
No, I'm okay.
You're okay?
slide, I think it was 18, when you were talking about the difference between the unrestricted and the diff. The adjustment, I believe it was the 9 million.
On the business type activity, that's the transfer of the sewer diff. You want me?
Yeah, so you're interested in,
I just wanted, if you could tell the public where they would be able to track that, so you see the significant change. So if they wanted to come and say, yeah, then show me where you transfer that money.
did we do, didn't we do a subsequent event note on this?
In last year's audit, we did do a footnote on the transfer of the diff funds, so you can see that change. What you're seeing coming in now, so the sewer fund itself, sewer diffs that you're collecting in prior years were in special revenue funds, which roll up into the governmental activities. But because it's sewer related, it belonged in the sewer fund. So that is really that one-time kind of puff to the sewer fund. Now you should just see ongoing diff collection happen as you issue permits. You shouldn't see that one-time change. You can't see it called out here because we roll all the funds up together into sewer. There are sub-funds that track the sewer diff separately within the client's, within the city's general ledger.
Thank you for clarifying.
No, I think I'm pretty good. I'm looking through my notes for questions and, by the way, it was a very good presentation with both of you. It was much clearer this year than last year. Part of that's the improvement in the audit structure, part of it's the improvement in the numbers, but also it, the two of you, you've done a good job of presenting that.
Thank you.
Thank you.
The question, the only one that I didn't seem to be able to take a note of was the ratio on cost of services. That was a good slide, but I guess I would like to know, what would be a really, let's say a robust or positive ratio threshold?
Where are you at? Which slide is that?
Perspective on
23.
I didn't make note of which slide it was.
Okay, so, yeah, you're talking about, I don't, do you know what would be a standard or normal for a city?
That we have, I can get that cost of services to tax revenue number. We do an annual survey. I don't know if that's online. It's not online, right? I think it's we have a publication and we'll send it to Jeff. But we survey all of our clients, and so I can get you what the cost of services to tax revenue ratio is across the board. We don't bifurcate it into size of city, and you have to realize every city's different, right? You go to city of industry, they're heavy retail, heavy sales tax, right? So it depends upon the city's structure. They're never gonna be 100% comparative, but if I had life my way, my taxes would cover 100% of my costs, so it'd be a 1-to-1 ratio. Obviously, government doesn't function that way, and so all this is saying is, as your cost of services are changing, and in your case, they went down, and your tax revenues went up, how much do you have to make up when your tax revenues fall short of your cost of providing the primary services of the government? And so that there's no right answer. It can be something, if you look at our federal government, it can be substantially different than the numbers that you're seeing here, right? So there isn't a right answer. It's just something to monitor to say, are we recovering tax? I know several years ago, you can be bleeding sales tax out into surrounding areas for various reasons because you don't have the retail here. And so it's just one of the indicators that you might want to look at to say, if we brought that sales tax revenue in here, wouldn't it help to support the cost of services?
I realize there wouldn't be a real one-on-one comparison, but in terms of general direction, strategy, oversight,
Yeah.
making, because it's nice to see the figures here, but
Yeah.
it's such a small view.
It is.
It would just be nice to know
What the benchmark,
Just
kind of
in terms
a
of
average
guidance.
benchmark.
We'll seek to have that information when we bring this to council.
Yeah, because this slide actually comes from our slide deck in total. And in fact, I think if you went to our client, you did go to our client, it's in there, right? I think, so we do an annual client training that's free to all of our clients in 3 different locations, and we do publish our survey in there, so we'll have that for you for the next meeting.
Thank you.
I just don't have it off the top of my head.
I had just one question regarding the pension standards.
Yeah.
I saw the number 77 and 75, depending. How's that stand with other cities? Because, I mean, it's an issue that we look at, that liability. Are we above or below the average of other community governments? Or would you
You're about norm. I would consider you pretty much norm, maybe slightly higher than the norm. I think 74 was the number this year. And again, I've got I can put that statistic in there from our annual survey. So I think you're kind of right at the mark. I do work in Arizona. I will tell you that their public safety pension plan is funded at 46%. So you go to another state, and Texas is probably something probably really good. Yeah, higher, right? Higher percentage in Texas. And so it just can vary. But generally, you're in a cost-sharing pool, so you're pulling with everybody else. So you're that's kind of the benchmark standard because you're in such a large pool. Yeah,
They did-
versus a separate plan.
Yeah, the Press Enterprise had there was an article about, a week and a half ago, about comparative study the state of California did relative to the pension funds of all the cities in the state of California.
Yeah.
And Beaumont was kind of right in the middle,
Yeah.
so.
It's a good place to be.
As a starting point, it is, because
Yeah.
it's always an issue. Wow, we're liable for X.
Right.
Any other questions?
I have a stupid question, but somebody said there's never a stupid
There's
question.
no stupid
But
questions.
Beaumont Charitable Foundation, what is that?
That's in the agency funds.
It's just about $22,000, but I never heard of
No, I think,
Beaumont Charitable.
It's in your agency funds.
yeah, I'm trying to think which one
Hang
that
on,
is.
it's so small.
It's very small.
But that's
I haven't
good.
paid much
You,
attention to it because it's so small.
Why?
Are you looking at the Beaumont redevelopment agency, the 22,000 and the redevelopment?
This is under the statement of changes in fiduciary assets
What page are you
liabilities.
on?
What page is
Well,
it?
One says 138 and the other one says 123, and that's another, I had a problem with the numbering of this whole thing.
Yeah, we'll work on that.
Sorry. It was very confusing, but anyway.
123.
The box page is 138 and the 123 is on the bottom of the box page. Anyway, it's Beaumont Charitable Foundation. I don't know why would Beaumont, does the city of Beaumont has a
Oh, I
charitable?
see.
So you
Yeah, that-
had 22,908 in it, and you pulled 22,908 out this year, so it doesn't have anything left in it anymore. So it was fully expended, huh? You closed that fund, right? Yeah. It was probably a small fundraising, nonprofit, good idea organization, but didn't take off. I don't know the history on
Oh,
that.
okay. It's not an ongoing thing then?
It
okay.
could be, I mean,
This is, I'm not the city historian.
yeah.
I do remember that at one time, before I had any elected position, that there was a charitable foundation that the city established and sometimes would give out small amounts of money to people who would apply in the community. And there may be a leftover amount of money that's in there. It hasn't, to my knowledge, come before council for at least probably almost 6 years now for anything to happen with that. So it's interesting that you should bring it up. We should look at it and make sure that it's logical. Do you want to?
Yeah, it was. I believe it was created right around 2009. The city created a 501c3, and it was there to collect cash contributions or donations. And the city council was serving as the charitable board for that organization. We don't fundraise or collect cash or anything like that. I
Very
know.
unusual, yeah, very.
Yeah, yeah. So it was an old 501c3, it was an old construct. It wasn't a JPA, there was nothing else to it, it was just a 501c3. And there was some debate, I think at some point, whether it had ever been filed officially with the IRS and whether the form or foundation documents had ever been filed, so.
For tax exempt status.
Exactly.
Yeah,
So-
and actually, as a city, you can collect donations.
Yeah, that's what I
They're,
mean.
they're, but a lot of donors don't want to give money to a city because then they're just giving you money and they feel better that it goes into a 501c. And I know in Stockton, when I was CFO, we had them, and we had like scholarship foundations and things like that. And they felt like they could get a deduction on their tax return because it went to a 501c3, but it can also go, you can donate to a city and take a deduction too, so.
But I haven't heard anything in terms of even anybody being interested in any activity on it for a number of years now.
Yeah, I don't know where the 22 is zeroed out, so the money obviously went somewhere, so I don't know where it went. but-
Any other
My
questions?
microphone's good. Good point, thank you. Do you want me to repeat everything I said?
You have
So
any
it-
closing comments,
Yeah, if
Jeff?
there's no other questions, I'll just kind of let you know where we go from here. There are a few things we're working on. I mentioned that 5 million that needs to get reflected from an operating grant down to a capital grant, and there's a couple other things we're working on. My intention is to identify any changes in a staff report that would come to the council. None of the changes we're working on, because there are a handful of things we're working on, none of them will change the financial picture. It's more of where the monies are allocated and how they're presented. But any changes we make from what you've seen, I will highlight in the staff report that comes to the council. Other than that, we are trying to work to get the single audit and the internal control memo done, and I'm hopeful that that will be ready to go to council as well. Is there anything else that I've left out?
GAN.
The GAN
GAN,
limit?
it's a one-pager.
Yeah, and then from what I've seen, we've always been pretty well under the GAN limit, so I don't expect any problem at this point. I think that's it. I want to thank again Paul and Vanessa and Lisa. Lisa and Jennifer, two senior accountants in finance, have put in tireless hours, and she wasn't lying when she said we got emails from Paul at 4 a.m. So there's been a lot of hard work, and I appreciate the effort from everybody.
Yeah, your team's been great this year. And I think the goal was, we were trying to get here last month, but we missed it by a little hair. But next year, we hope to be in front of you in January, so.
Thank you very much, and thank you for all your hard work. Very much appreciated.
Yeah, appreciate it very much, Finance Department, Jeff. Will we be getting a copy of the PowerPoint for council that we can write on?
We will be doing, yes, we can get you a hard copy, and we're going to be actually presenting. We'll probably tweak this a little bit, because I know the two of you might get bored seeing this whole thing over again, but it'll be quite similar to what you've seen.
And it goes with my notes, so don't change it too much.
Okay, no, then maybe we won't change it all.
Okay.
Just a couple of numbers, because we have to reclass.
I
there were-
think I normally shorten down my piece of it, but not the financial piece.
And there was one or two numbers that just needed minor corrections
Yeah.
on, so.
Yep.
Mr. Chairman, do you need a motion to receive and file?
Nicole?
So move.
Okay, it's been moved. I have a second.
I'll second.
Second. Second. All in favor?
Aye.
Aye.
Okay. I want to thank both our financial folks and Vanessa and your crew for doing this. It's great. It's good to be on schedule here with us, and we hope next week we have all this information for the council meeting on Tuesday. Thank you.
Thanks.
Since there's no further business, I adjourn the meeting at 7:10.
Very good.